Good morning, colleagues. We'll call the meeting back to order. The first half hour, we were fortunate enough to have met our new interim Auditor General of Canada, and in camera we met them, and now we're being televised. And so I would encourage you all, if you have a phone or any kind of a device that may interrupt the proceedings, please, if you wouldn't mind putting it to mute or silent, that would be great. We now are reconvened to consider the Special Examination Report of the Joint Auditors to the Board of Directors of Canada Mortgage and Housing Corporation of the 2018 Fall Reports of the Auditor General of Canada. We have with us this morning from the Office of the Auditor General, Ms. Lisa Lamarche, Assistant Auditor General, and Clyde McClellan, also Assistant Auditor General. From Ernst & Young, we have Michelle Bergeron, Managing Partner, and from Canada Mortgage and Housing Corporation, Mr. Derek Ballantyne, Chairman of the Board, and Mr. Evan Sedal, President and Chief Executive Officer. So we welcome you here, and we will turn to the Auditor General's office at first for their statement, please. Mr. McClellan.
Thank you. Monsieur le Président, je vous remercie de nous donner l'occasion de...
Mr. Chairman, I'd like to thank you for this opportunity to discuss our Special Examination Report on the Canada Mortgage and Housing Corporation. As you mentioned, I'm accompanied today by Ms. Lisa Lamarche, Assistant Auditor General, who was the principal responsible for this audit at the time of the report. Because this audit was done jointly with Ernst & Young, we are also accompanied by Michelle Bergeron, a partner with the firm. As you know, in a special examination, we seek to determine whether the Crown Corporation's systems and practices provide reasonable assurance that its assets are safeguarded and controlled, its resources are managed economically and efficiently, and its operations are carried out effectively. Our examination covered the period from March to December 2017.
That the corporation had in place good corporate management practices. However, we identified a significant deficiency in the Board of Directors' complement and the related impact on board oversight. Specifically, we found that 4 of the 12 positions were vacant, which left gaps in the competencies and diversity of the board and hindered the effectiveness of its oversight. This deficiency matters because an incomplete board of directors with competency gaps could compromise the board's ability to effectively oversee the corporation. Given the complexity of multiple transformation initiatives underway and their significance to the corporation's operations, adequate oversight and competencies were critical. In December 2017, a number of appointments to the board were announced. We also found good strategic planning, performance measurement, and risk management practices, but there was room for improvement in the corporation's capital management and stress testing practices. We noted that the corporation did not quantify the impacts of all material risks to ensure that sufficient capital was earmarked for these risks, and that it did not perform ad hoc stress testing to further explore its vulnerabilities. These weaknesses matter because determining the level of capital the corporation needs to address all significant risks helps mitigate financial risks to the Government of Canada and to the Canadian taxpayer. Furthermore, without the additional ad hoc stress testing, the corporation could not explore its hidden vulnerabilities and inform senior management and the board about potentially harmful scenarios. We found that the corporation had in place good practices for its mortgage loan insurance, securitization, and assisted housing activities. Specifically, the corporation planned these activities, implemented them effectively, and monitored and reported on them. However, we noted weaknesses that were related to the significant organizational transformation initiatives underway, particularly in the integrated management of the technological and non-technological transformation initiatives, and in the identification and monitoring of performance metrics at the individual project level. Ces faiblesses sont importantes.
These weaknesses matter because for a large-scale complex transformation program, managing all transformation initiatives together ensures proper integration of project interdependencies and facilitates change management and risk management. In addition, without clearly defining and documenting objectives, outcomes, performance metrics, and expected benefits, the corporation may not have been able to assess whether expected benefits were achieved once the projects were completed. The corporation agreed with all our recommendations and prepared an action plan in response to our concerns. However, because our audit work was completed in December 2017, I cannot comment on any measures the corporation has taken since then. The committee may wish to ask the corporation's officials to clarify what measures it has taken in response to our recommendations. Mr. Chairman, this concludes my opening remarks. We would be pleased to answer any questions the committee may have. Thank you.
McClellan, and now we will move to CMHC and to Mr. Ballantyne, please.
Merci, Monsieur le Président. Je suis heureux d'être ici.
Thank you, Mr. Chair. It's a pleasure to be here. I am joined today by President and CEO of CMHC, Evan Siddall, who will also provide brief opening remarks. We welcome the interest in the most recent special examination of CMHC's operations conducted by the Auditor General of Canada and Ernst & Young. The Financial Administration Act requires that all Crown corporations undergo a special examination at least once every 10 years. The special examination we are discussing today covered the period between March 1st and December 31st, 2017. For the most part, the audit concluded that CMHC maintained good corporate management practices during this period, in a manner that provided the reasonable assurance required under the Financial Administration Act. However, auditors identified a significant deficiency in corporate governance related to board appointments and oversight and competencies, as you heard this morning. I will limit my remarks to measures taken to correct these issues. Most notably, during the period covered by the audit, 4 of the 12 positions on CMHC's board of directors were vacant. This resulted in gaps in the competencies and diversity of the board, which the auditors concluded hindered the effectiveness of its oversight. CMHC and the board itself have limited involvement in the selection of board members. These are governor and council appointments. However, I am pleased to say that the government appointed 6 new members, including me, to the board in December 2017, just as the special examination was wrapping up. These appointments filled the 4 vacant positions, as well as 2 that were about to expire. Importantly, they also helped to address the competency and experience gaps identified by the auditors. Since then, the government has appointed 2 additional members to replace individuals whose terms had expired. Together, the 8 new board members have brought diverse perspectives and a wide range of skills to the board, including in areas related to affordable housing, information technology, and chartered accountancy.
Is managing large and mid-sized housing organizations, which includes extensive work with nonprofits, charitable, social entrepreneurship, cooperative, and foundation sectors. I believe Evan would agree that the reconstituted board's knowledge and expertise have been of significant value in helping CMHC lead the National Housing Strategy, which was announced post-audit, as well as ensuring that Canadians benefit from the stable and secure housing markets. Also, in response to the auditor's recommendations, CMHC has introduced new practices to improve the capacity of board members to oversee the company's operations. For example, it has strengthened the annual review of board competencies to identify gaps, and my board colleagues and I received training in specific areas of corporate governance. A menu of relevant courses and training for board members is updated quarterly, and the company will be presenting a list of suggested deep dive topics for the board and its committees on an annual basis. The board created a new oversight board committee, Housing and Capital Projects Committee, which will replace the Affordable Housing Committee. This committee will oversee the national housing strategy, capital spending, future of work projects, and any other projects with an expended cost in excess of $10 million. The Housing and Capital Projects Committee will meet for the first time in May 2019. These include measures under the National Housing Strategy, as well as CMHC's new Housing Affordability Strategy, which aim to ensure that by 2030, everyone in Canada has a home they can afford and that meets their needs. CMHC is supporting this new committee's work by providing regular updates on assisted housing activities. The company also provides information through its quarterly Assisted Housing Business Supplement. Thank you again for the opportunity to be here and answer your questions. I'll turn things over to Evan now, who will complete our presentation. Thank you.
Thank you, Derek. On my own. There we go. Thank you,
Yeah,
Derek.
We'll take care of the mic, and
Okay.
there we go.
Touche pas. Thank you, Mr. Chair, members of the committee, and thank you all for the opportunity to be here today. Let me begin by reiterating CMHC's commitment to the aim of special examinations required by the Financial Administration Act. Ces examens fournissent au gouvernement au
These audits provide the government, parliamentarians, and Canadians in general with independent assurance that CMHC has the necessary systems and practices in place to safeguard our assets, that we efficiently and economically manage our resources, and effectively carry out our operations. They also help build trust in CMHC, a systemically important financial institution with a legislative mandate to contribute to Canada's financial stability and facilitate access to housing.
They make CMHC a stronger company by identifying management deficiencies that we need to address. I'd like to respond to a few of those. In addition to the corporate management practices that Derek has spoken about, the most recent audit also focused on two other key areas: management of our mortgage loan insurance, securitization, and assisted housing lines on the one hand, and management of organizational transformation initiatives on the other. The Office of the Attorney General recommended, for example, that we enhance our assessment and documentation of the capital required to cover all material risks faced by CMHC, including reputational and strategic risks. I'm pleased to report that an assessment of these capital requirements was recently completed. Stress testing is a crucial discipline as we continue to improve our work at CMHC, and we've identified additional ad hoc stress tests, again in response to a recommendation from the OAG, to ensure that we better understand and are able to respond to vulnerabilities in the event of extreme crises. Notably, I should emphasize to committee members that we are the only Canadian financial institution to publish our stress testing results publicly every year, part of our commitment to transparency. As you may also be aware, CMHC is a much transformed institution. We are proudly an innovative, client-oriented vehicle for housing policy and housing affordability throughout the economic cycle. In 2015, we began a multi-year initiative to modernize and transform our technology and business practices. The special examination auditors made a number of recommendations related to this work, and we're in the process of responding to each of them in accordance with our action plans. For example, we established a new division to oversee project and change management initiatives and to facilitate reporting to senior management and the board on these initiatives. We've clearly defined the objectives, outcomes, performance measures, and expected benefits of our transformation projects and advise the board of key achievements on a regular basis. The OAG also recommended that the Board of Directors should play a more active role in setting CMHC's strategic direction. Again, we had already taken this recommendation into account by the conclusion of the examination. As a matter of fact, last year we engaged in a thorough review of our strategy. It was discussed at 3 separate board meetings, including a session dedicated completely to this topic. This review also absorbed a lot of our time at Executive Committee, not to mention the work of a dedicated strategic advisory group that met multiple times, and we had established a strategic function at CMHC with a series of full-time colleagues. In short, the board played a key role in the development of our new housing affordability strategy, which housing stakeholders have endorsed across the country. As Derek noted, our strategy sets out a bold aspiration that by 2030, everyone in Canada will have a home that they can afford and that meets their needs. Clearly, this is an ambitious goal and one that exceeds the targets inherent in the National Housing Strategy of removing 500,000 households from housing need and reducing homelessness by half from 2018 levels. Nonetheless, achieving housing affordability is vital to all for Canada's future economic health, social stability, and inclusion. We recognize this, as do housing providers and our many partners across the country, and indeed we believe that CMHC exists for this single purpose. So we've restructured our company recently to deliver results for Canadians and ultimately to achieve our aspiration. I am sure Derek agrees with me that I am particularly proud, we are proud of our employees' resilience and commitment throughout this process. As a result of the restructuring, 215 employees changed roles, and 2 out of 3 employees are now reporting to a new leader. Despite all of these changes, the third significant reorganization in 5 years, we continue to provide uninterrupted service to Canadians, and our project portfolio remains largely on track. Soutenu par cette équipe d'employés.
Supported by this team of dedicated employees, the initiatives included in the National Housing Strategy and new measures proposed in Budget 2019 provide a solid base for our new affordability strategy. Nevertheless, we realize that we will need to go further and faster to reach our goal. At the same time, as a Crown Corporation, with the sacred trust of managing public resources, we are committed to being a leader in housing risk management and an accountable, transparent, efficient, and innovative organization that is admired and trusted by Canadians from coast to coast to coast. That concludes my remarks, Mr. Chair. Thank you again for inviting us to be here. We look forward to the committee's questions.
Mr. Siddall, and we'll now go to the first round of questioning. That's a 7-minute round, and Mr. Sarai, you have the floor.
Sure. I want to thank you guys all. First of all, it's always good when you come after a report done in 2017 and it's about 15 months later, and most of the kinks in the system seem to be resolved, but still have a few questions. For the Auditor General, you said talk about reputational harm. Is that referring to lack of business defaults? How do you calculate reputational harm for an organization? I know banking's usually default rates. You need to have reserves of a certain percentage based on default, but how do you calculate or prepare for reputational harm? With that, and also what does that entail? Does that mean business slowdowns? Does that mean CMHC has a scandal internal on their board? What would mean reputational harm for them?
So perhaps, Mr. Chair, if you'll let me just respond very briefly. When we talk about reputational risk, we usually refer to that as an illustration of operational risks that can be faced in an institution that are not financial. So it's not something that we attempt to see organizations measure as a financial metric or a series of numbers. What we look to see is how the organization contemplates the types of risks that can affect its reputation. So you referred to something just as an illustration, perhaps a scandal. What would that mean to the ability of the organization to continue its business model, to respond to the perceptions in the public of those particular types of issues? And we don't attempt to quantify those, but we look to see how the organization would respond and whether, in this particular case, some capital would be necessary to assist and reserve for that type of a situation.
Interesting. Okay. I also, my next question is regards to stress testing, and I have a big interest because of my constituents on stress test, the OSFI stress test, and I was wondering if the CMHC has stress tested against the OSFI stress test, the B20 stress test, and how it would affect their business line, and has it affected that, and has that been done? Maybe Mr. Siddall can answer that.
Sure. So let's just distinguish between the two types of stress testing, of course. Stress testing of our capital is something that we do with a range of scenarios of economic downturns. For example, we would model the U.S. financial crisis as if it were to happen here. And we do that as part of our annual work, and that's what we publish. Somewhat confusingly, the stress test I think you're referring to is the stress test associated with underwriting new mortgages, where we add approximately 2% to the prevailing rate in order to make sure people have the ability to withstand interest rate shocks. We actually do stress test that in a different way. We looked at the impact on our business. In fact, there was a rough decline in so let me just also, there's two parts to this. The stress test for 5-year mortgages was imposed with respect to insured mortgages by the Minister of Finance in October 2016 and extended to uninsured mortgages by OSFI at the beginning of this year. So somewhat different. The second category doesn't pertain to our business. The first does. And we witnessed in 2017 and throughout 2018 declines in our volumes of insured activities of 15 to 20%. And I should tell the member that was roughly as expected. We estimated it could be 20 to 25%, but we thought behavioral factors, for example, people buying smaller homes, might alleviate some of that pressure. And that's what we've observed, and it's persisted since then.
So you did stress test against the OSFI. That's what I was asking. You have used measures internally to make sure that how those would affect your bottom line and your actual volume amounts.
Yes, we have.
Okay.
Yeah.
I can see how it works for home mortgages, et cetera, in terms of IT transformation. And I notice you guys have implemented new technologies. And I've been speaking to some of your staffers in British Columbia in terms of the new housing strategy. So therefore, they've told me about new portals, et cetera. And I'm just a little cautious and worried if you have a portal that is calculating everything in terms of large projects and there's no human touch. Is that a factor? I can understand on a normal home CMHC mortgage insured, there's probably a formula, it plugs it in, calculates, sees if you qualified based on your T4, et cetera. But when it comes to large projects, particularly, say an example would be the Affordable Housing Initiative. Would that be all done by an IT algorithm, or would it be done with a human touch? Because otherwise there'll be hesitancy from people to actually submit applications, or there may be biases created when people figure out what the algorithm is to approve their projects.
For sure. You'll be gratified by the answer. First of all, we do use machines to manage workflow in our homeowner transactional business. That's a piece of software called Emily that we're updating. That's effectively a rules engine that something's either automatically approved in an insured mortgage application, or it's referred to somebody for intervention if it's more complicated. In the case of multis, so multis are anything where more than four units, so 4 homes in a unit, apartment buildings, condos, et cetera. Those are adjudicated differently, and all, at this point, largely manual. We're putting in a new technology system that will give people tools to do that, but they're always complicated. They always involve different financing structures, different corporate structures, and while we want to automate the rote part of that activity to make it more efficient, there's always human intervention. There's always an underwriter involved.
Okay. This may be to the Auditor General's office, or it may be to Mr. Ballantyne. What I see in this report is that prior to December 2017, the board was not informed well on all business lines and other practices. And it seems to me that there was a disconnect. Was this because the deputy ministers that sat on that board were kind of facilitating that gap and not making them aware? So just using them more as figureheads? Is that the gap that was in there that we see? Is it seems like there is a lack of information flowing to the the board itself prior to December 2017? And if that was the case, has it been resolved now?
So I believe the lack of information flow that you're referring to may be in terms of consolidation of the project initiatives that were underway. One of the observations that we had was that there was no consolidated reporting on technological and non-technological initiatives to give the board an idea of how all of these came together and where the pressure points were in terms of efforts and costs. So I think that is not so much due to the board membership as it is just the information that was being accumulated on the various initiatives. The rest of the observation relates more to the different competencies and whether the board was able to play the role, the oversight role that they were expected to play, given that there were certain competencies that weren't actually present on the board. An example of that would be IT. When you have significant IT initiatives underway and there's no IT competency or strength on the board, it limits the board's ability to effectively challenge and oversee the project that's underway. So I think that
In terms of that,
No. Thank you. We're a minute over already, Mr. Stride. Very good
Thank you.
questioning. Good questions, and we'll now turn to Mr. Kimmich, please, for 7 minutes.
My questions are all to you, Mr. Sadal, and to your chair, if he wants to answer. In your 2018 corporate plan, you reduced your reserve from 220% from 2016 to 165% from just 2017 to 2022. On page 14 of the special examination report, the Auditor General's office said that in order the corporation not quantify how much internal capital it should set aside in case reputational or strategic risks were realized. How did you make the determination then to go from 220 to 165 if the AG's office has said that your controls internally, you had a weakness and to determine your capital management needs?
The change in 2018 from 220 to 165 was as a result of a change in methodology at OSFI. It's as if accounting rules changed and you had to restate. So it's a comparison of apples to oranges, and it would be inaccurate to suggest that we decreased our capital. As a result, it's just a different measure. We did have some hedge or contingency capital that we'd held for general matters, largely relating to model validation, a slightly technical matter. Nothing with respect to, as you said, reputational risk in particular and strategic risk. That is now part of our own risk and solvency assessment process this year. You may want to add to this. And we'll be advising the board of our views on capital, but we've stress tested now for those activities.
So can I ask you then a question, because you have now been directed, the CMH's been directed to pay dividends that's coming out of the reserve. So premiums paid by homeowners who are purchasing a home and getting a policy for the banks because it covers lenders. That dividend is now going to you, but based on the Auditor General's report here, they're saying that the controls, the capital management, the stress testing internally to determine whether you have enough money set aside to cover big scenarios, which you do post online, that there was a weakness there. So how do you know the right amount of dividends you should be paying out? And you've already paid out last year, I think in 2018, public accounts documents showed $5.675 billion were paid out. I'm just a little concerned if there was a weakness going into the time period where those dividends were set to be paid and now going forward you're paying it. Can you give me some assurance that you've done the homework to ensure you have the right amount of capital and the testing scenarios that you post now publicly? All you do is post percentages. You don't actually post the methodology as far as I know.
I'll continue.
Go, you can do
Yeah.
it first.
We had a lot of excess capital, and it's an effective discipline on management that management would operate with finite resources. Defining just how much excess capital we have is a problem at the margin when you're a little unsure as to what your capital should be, or when the Office of the Auditor General says you haven't got it quite right. That's not enough to say you shouldn't pay a dividend. It means you may want to keep a little extra buffer to be sure, and that's exactly what we did.
Forgive me, can I just interrupt you? Because you said twice now excess capital. Does that mean that your premiums were set too high?
No, well, in hindsight, it would mean that our premiums were set too high for the economic cycle that in fact occurred, but we set our premiums to adjust for an economic cycle that could be good or bad. And we've had strong economic growth that's persisted and no downturn. And as a result, looking backwards, we've had excess capital. Looking forwards, we're pricing quite similarly because business cycles go up and down.
But most businesses in the good years, they try to build a reserve that then they're expecting in the down years, which is why you then stress test internally to make sure in a scenario, say a major earthquake in Vancouver or a very deep downturn, you have a reserve. But the Auditor General's report says that there was a weakness internally. And now you have supposedly going forward an internal method, and those scenarios you said will be posted. So will the methodology be posted as well online?
We won't post the methodology. We debated that. We've gone quite a distance towards publishing our stress testing. It's actually a relatively complicated series of models that we view to be proprietary. So commercially, we wouldn't publish those. I should tell you that with respect to the payment of dividends, this is a matter that we debate economic capital methodologies at the board practically every meeting, certainly every time we pay a dividend. And I should tell you that the 165% number includes a cushion. So it's at 100% of regulatory capital where we would have to stop underwriting new business. We've got a capital of 65% on top of that, and we've paid the dividend in excess of that. So I can assure you, sir, that we have very much sufficient capital to survive an economic downturn.
But that's not quite what the report here says. The same page on page 14 on the weakness of the stress testing, the what-if scenarios, which is the determination of reserve, how much reserve you should be keeping. So how do you set the 100%? They're saying that there's a weakness, and how do you assess those various scenarios? And then creating the cushion on top of it, you need to have the proper models. And that then leads me to my next question, because the CMHC is going to be asked going forward to take on a new program, a commercial program called the Shared Equity Mortgage, I'll call it FDHB incentive. Have you done internal stress testing then using new models based on the AG's report to you to make sure that you keep enough spare capital on hand in case some of these FTHB incentivized shared equity mortgages go under?
The answer to that question is no, because we will administer that program on behalf of the government in Canada and will not be required to hold capital against that. It'll be a charge against a consolidated revenue fund. So it'll be part of parliamentary appropriations, sir, not a matter for our commercial businesses.
So there's no risk to your reserve. None of the money, if a mortgage fails a shared equity mortgage fails, none of the money will be coming out of your reserve?
That's correct.
So all the money will be coming out of the consolidated revenue fund?
That's correct.
Okay. Can I ask you then about the FDHB incentive program and your capitalization needs? So internal staff of yours will be used to run this program?
Yes, that's right.
And so have you made that assessment already? Because you just mentioned that you've done a major reorganization at the CMHC, and I think 2/3 of your staff now are reporting to a new leader. You had
That's
mentioned.
right. Yeah.
So do you have a unit now set aside within your staff complement to handle these SEM programs?
Yeah, we do. In fact, the spending associated with that program was included in the budget 2019, and so you can refer to that for that information, because it will come from parliamentary appropriations. And in fact, because we just completed this reorganization, we were much better set up to drive a client-oriented business, and we did add some new staff, but also dovetailed it within the recently reorganized functions.
Much. Our time is up, unfortunately. Now we'll move to Mr. Christofferson. 7 minutes.
Thank you, Chair. And first opportunity I've had since your public announcement, I just wanted to welcome you to what Nathan Cullen is now calling the Lame Duck Caucus. And hope your retirement is as fruitful as you deserve. You've done a great career. We're very proud of the work you do. I'm glad I got here. I got trapped in the traffic. I guess one of the bridges is shut down, and I really wanted to get here for this one. I was very enthused to dig into this one and get to this public meeting. And the main reason is that this is a darn good report. I mean, there are some issues And my two previous colleagues, Tom and Randeep, I think have done an excellent job of wading into the minutia of that. But Chair, I love it when the big problems are buried in the deep the details, minutia of what we're working on. And in the main, your biggest problem and your biggest deficiency wasn't even your fault. It's got to do with the appointments process. And, you know, the auditors in the language that they use were practically swearing when they say things like serious weaknesses. So, not your fault. So my first question is, and I think I got something from your opening remarks, but is that now resolved? Are you up to speed now on the board appointments?
Through you, Mr. Chair, yes, we are up to speed on all the appointments. We have a full complement of directors. We have bridged all the gaps or deficiencies in capabilities and capacities on the board. And I think we, in total, have sort of a rich combination of experience that covers a broad spectrum. So on the context of the board composition, we're certainly bridged, and we have strengthened the internal processes and the oversight processes in relation to the remarks made by the Auditor General. So I think on both counts, both in terms of structurally adjusting some of our committees, adjusting the processes internal to the board and the board membership, I think we have addressed all those issues.
Very good. That's good to hear. I have to tell you, Chair, this is not anything new. We've had it with previous government, the appointments process. It's always a problem. There always tends to be bottlenecks. And full confession, I can go back to when I was in provincial government and we had the same problem. We were always seemed to be behind, and it always has such a major impact. And yet, at the center where these decisions are made, it ranks very low in terms of the crisis problems, but in terms of the manifestation of problems that it causes, it's huge. And I don't know what the answer is other than to hopefully keep underscoring it through reports like this and politically underscoring and holding the government to account in question period as to why these things aren't happening. So I just wanted to say that in the main, when I first opened this, I thought, oh, CMHC, this is going to be going down the rabbit hole. This is going to get ugly because there's so many moving parts. So many, each piece needs to be analyzed so carefully. And if there are problems anywhere, my experience is that a lot of it is lack of planning, lack of analysis, lack of risk assessment. All the areas that you've done a pretty darn good job on. So I just, my opening, and I don't do these lightly, as people know, but I gotta say, in the main, given the responsibilities and the number of moving parts that you have to be responsible for, and the in-depth thinking that needs to happen, I was fairly impressed with how well the operation has run. And I really appreciate the questions of my colleagues who have a much deeper background in these things, and that's why it's good to have a good mix of a PAC committee so that we can all bring different perspectives. I'm curious, what... I noted with interest that it said on page 8, under 23, board appointments. And it struck me, it said, further, anyone appointed as a director or president is required to divest themselves of any shares of lending institutions within 3 months of their appointment. These restrictions constrain appointments to the board by limiting the pool of eligible candidates. Wow, that's pretty big. I mean, senators don't even have to do that. But we won't go there, will we? How much does a board member make?
I should just be able to roll this one off the top of my head.
Yes, you
should. They're paid on a per diem basis. My recollections were 400 a meeting. Everybody's 400-ish a meeting. And so there would be likely 8 meetings a year for board members, plus a couple of other that may come up as conference calls, whereas there's a lesser fee paid.
I see you pointing
You look
somewhere.
like you're leaning in.
They're pointing to me. I don't know the answer to the whole scale of what numbers apply to the scale. I think I will simply say that the chairman's assessment of the likely per diem is accurate from my knowledge of crowns generally.
Go ahead.
May I just add through you, Mr. Chair? Thank you. 2 things. Managers need oversight. It makes us stronger. You need this sounding board. And so an effective board of directors is crucial to an institution as significant as ours. And I would say some past liberal practices would probably have been curtailed with this is ancien regime, probably been curtailed with more informed oversight. Having this board of directors in place is crucial, and the restriction that you mentioned in our legislation is quite prohibitive.
Yeah.
It extends to the fact that if I own, as CEO, shares in a mutual fund that happens
get
to
it.
own shares in a lender, I can't be CEO.
Yeah, no, I get it. I understand why, and it's great public policy. But from a practical level, I'm wondering, geez, like either there should be a little less restriction or a little more money. But that's an awful lot. I mean, if you're retired and you're sort of dabbling and recontributing based on your experience, okay, I could see that. But somebody who's active in the middle of their career, the kind of sharp people that we're looking for, not that retirees aren't sharp, are they, Chair? No, they're very sharp. They're very, very sharp retirees. But nonetheless, you do want people who have various experiences in life. So just I don't know. I see the one of the assistant auditor generals kind of nodding her head. Any thoughts on this? Maybe you've had some chats. I don't know. It just seemed to me to be an awful lot to ask, and it should be asked. It's good public policy, but boy, that's not much remuneration for giving up your whole investment package that may be leading to their retirement, Chair. So, further thoughts from the Auditor General side, please.
I won't comment on the wisdom.
No. Over here, please.
So, Mr. Chair, if I may, we have not audited compensation arrangements for boards of directors. So while it is a very important conversation you are having as members, I must say our office has not done any sufficient audit work to have any real comments in that area.
Mr. Valentine, did you have a comment?
Well, I just wanted to point out that I won't comment on whether or not it's a restriction that has impact, but there is an option to place one's investments in a blind trust, so that if one holds those particular shares, they can be placed sort of at distance from the individual.
Yeah, and that's kind of what you'd think, and I don't mean to be, this is my attack day on the Senate, but I mean, you'd think that people at the level of Senate would be expected to do the same thing, and they don't. In fact, they can sit on boards, but again, we won't go there.
Maybe I'll jump in right there,
Probably.
Mr. Christofferson. One should not give up in your retirement, Mr. Christofferson, and downgrade the Senate. There may be a place for you. Mr.
Death,
Area.
taxes, and me in the Senate. Three things you guarantee are...
Thank you, Mr. Chair. I tend to agree with my colleague, Mr. Christopherson, but here I have to disagree. I'm really, really concerned with this Auditor General's report. Some of the points that was raised by Mr. Kamick is quite valid. Way back in 2016, annual reports, we get public accounts. In that 2 huge volumes, we get few lines on the contingent liability. The contingent liability from CMHC is in the tune of about $450 billion. And when I expressed my concern, I was assured then by the Assistant Deputy Minister from the Ministry of Finance that the stress test is all done, it's all good, everything is very good, but Auditor General has not given you the clean check on that very critical component of CMHC. You are doing great job in other things, but when it comes to contingent liabilities, all I have to look at is what happened about 10, 12 years back in the US when Freddie Mac and Fannie Mae collapsed and led to all the financial crisis. And just to quote the Auditor General's remarks, that there's a need to address all significant risk, helps mitigate financial risk to the Government of Canada and to the Canadian taxpayers. I did see in your prepared remarks, I thought I was surprised that you did not emphasize on the stress test, but in your verbal remarks, you did change some of the things, which is quite interesting, quite welcome too. Going back to this contingent liability and the stress test, I want to ask the Auditor General, do you have expertise in evaluating the methodology used by CMHC in doing the stress test?
Thank you, Mr. Chair. In-house resident expertise, no, but when we deal with particular issues such as what you're discussing, we engage with private sector counterparts who have expertise to look at the different models and assess the potential impact. So how we address the potential issue is to make sure that we engage those who have experience.
Thanks. Mr. Siddal, who does the stress test? Is it in-house or external consultants?
We do it ourselves. We have built the models with the help of external support, but we do it
So
ourselves.
your employees, they do the stress test, they give you good results, which you give to the board and say everything is good?
And OSFI oversees that work, and of course the Auditor General did a special examination.
No, once again, it is done internally.
That's
your
right.
methodology, you proudly said that you publish, you are the only Canadian financial institution to publish the stress testing results annually.
That's
You
right.
proudly said that, but you don't make public the methodology that is being used. And how do we know that the stress test is quite good? How do we know that the taxpayers will not get, taxpayers are on the hook for anything that happens?
Thank you for that question. Important, of course it is. So in the first instance, it's important that we understand the risks that we manage, and it's proper that we stress test ourselves. Your question goes to how do we know those are proper stress tests? The first thing is we operate 3 lines of defense within the company. The first line of defense is the business line. The second line of defense is a separate risk function. That risk function conducts the stress testing itself. Then our internal audit reviews that activity. On top of that, annually, OSFI conducts a supervisory examination of what we do and reports to the minister responsible for
Sorry,
CMHC,
Mr. Dell,
in addition to the board's review of that activity.
Once again, I always thought that there is an independent body or independent consultants who do not do any business with you. They will be conducting this stress test. And here it is all done internally.
If I may, sir,
Yeah.
the Office of the Superintendent of Financial Institutions is an independent body.
Okay, but then if you say that what you are doing is right, you have done all that 3 things you mentioned, why is Auditor General not satisfied?
Well, I think you may want to address that question to them.
Absolutely. Can you give it in a very short?
So, Mr. Chair, if I may, I'll start, and then I'll ask Mr. Bergeron to provide more specific details. So I think what I'd like to do, if I may, for a minute, is just take a look at our report in the bigger picture and drill down to the types of issues and questions you are rightly posing and delving into. So when we do a special examination of a Crown corporation, we look at risk management and the systems and practices around risk management. And when we do that with the help of external consultants in an area such as financial risk management at CMHC, we need to come up with an assessment as to whether or not those systems and practices have a significant deficiency. And I want the members to be aware that when we looked at CMHC, as it relates to their risk management practices, we did not identify a significant deficiency. That's important because what it does is it sets a bar of acceptable practice as what we understand, and whether or not we feel there is a significant risk that the corporation can't meet its statutory obligations. So big picture, in this particular case, we didn't see a significant deficiency, that there's a massive failure. Yep.
Before Mr. Bergeron,
Yeah,
does Ernst & Young has got any business relationship with CMHC?
We're the co-auditors of CMHC, so independent co-auditors.
So once again, you have got business relationship with CMHC, and you are also helping the Auditors General. Auditor General Office could have found somebody who did not have any relationship with CMHC. Is it not right?
So let me be clear that they do not have a business relationship. Their only relationship is co-auditors with us.
Yeah.
By law.
Yeah.
Okay.
Yeah.
On the former question, I think.
Yeah. Yeah, as Klein mentioned, if you look at the report on page 13 on stress testing, I think our first comment is that. Pardon me.
Yep.
Sorry. So we do mention that the corporation had a stress testing policy in place, and they do have the stress testing result to make sure they had adequate capital of business strategy. So our conclusion is there that they do have a stress testing policy. They are doing stress testing. What we intend to in our report, and we feel it's important, is that when you do ad hoc stress testing, is to pick some event that would be major for the corporation. And why you're doing that is just that in case those events occur, then you have a plan and you're able to react to those plans.
I'll let him finish, but I can't let you come back in, Mr. Area.
Yeah. So it's really kind of a perspective saying, let's find event that would be that would incur capital problem, and then ought to resolve those events and ought to have an action plan defined on that. So it's more ad hoc, additional stress testing policy in terms of be proactive for the future in terms of events. But there are some stress testing policy in place that would have that were in place.
Thank you. We'll now move into the second round. We have the bells are ringing. I see that it's about 3 minutes after 10. So there may have been okay, there was a motion to go to orders of the day, which means a 30-minute bell. And if it's okay, we'll go for another 20, 25 minutes. And then we can run upstairs and still make the vote. All right, Mr. Kelly, please.
Thank you, and I want to allow Mr. Kimmich to continue the line of questioning from the previous round, but before I split my time with him, I want to address or perhaps ask for clarification on from Mr. Siddell in response to one of Mr. Kimmich's questions on whether or not insurance premiums were set too high, given that you had excess capital. After many years of concern being raised from the finance department about capital reserves and public risk in the insured mortgage business, that CMHC in fact had excess capital to be paid back into to the Crown. It seemed like you're trying to have it both ways. If the premium was set correctly, and the business cycle just happened to be positive, and you prepare for good times or bad, then it would seem then that home buyers are paying a tax when times are good. If times just turned out to be good, and so that meant you had excess capital that is now just turned over to the Crown, how is that assessing the correct level of premium to account for good times or bad times?
If I may, Mr. Chair, thank you. We can't predict the future when we set pricing, and we set that pricing in anticipation of a business cycle over the life of a mortgage, which could be 25 years, on average about 7. And in fact, in our annual report, we publish an alternative view of the world that could result in a downside scenario. And this is in addition to our stress testing, because, we've had an extended boom time in economic cycles. In hindsight, it is true that if the economy is consistently growing, the presumption associated with the insurance premium de novo at the beginning was too high. And the proceeds have gone back to the government of Canada, and in the case of our private competitors, to their shareholders too.
So they were set too high.
Well, they weren't set too high at the time, sir. They were set too high with the benefit of hindsight.
Okay. I'll let Mr. Kimmich take over from here.
How much time do I have, Mr. Chair?
3.5 minutes.
3.5 minutes. So I want to continue partially on what I was asking about before, specifically to the FTHB and incentive. You said it was going to come from general revenue, doesn't impact the reserves, therefore the weakness identified by the Auditor General and the capital management practices won't be impacted. Is that borrowing or the funds, are they going to come from the Crown borrowing program?
Yes, they would.
Yes, they would. My next question then is the internal stress testing scenario planning that you undertake right now. So it's to understand the vulnerabilities that the institution has as you issue insurances, and you have you've done some work, I'm guessing, a risk analysis on FTHB and the incentive and how it would impact your regular business. So the reserve that you hold, was that risk analysis done based on the new models post AG report or on the previous models? I'm trying to understand like how much actual assessment of risk have you done specific to the FTHB incentive that the government has proposed based on the AG's report saying that you have a weakness you had a weakness or still continue to have a weakness internally?
Yeah, to be clear, and they have clearly stated that it is not a significant deficiency, and so I want to just address that.
It's a deficiency.
An insignificant deficiency.
Pardon, sorry, Mr. McLeod, do you consider it an insignificant deficiency?
So that is not a terminology we use. So just very, very brief. If it's a significant deficiency, we will raise it. Anything else is a recommendation of a weakness that we identify needs improvement.
Okay, thank you.
As I said earlier, we did assess the impact on our business as a result of some $1.25 billion of mortgage insurance activity moving away from ourselves and our private competitors into potentially this new incentive, yes.
So my next question is on paragraph 24, the AG identified a weakness on the board level in its management of financial reporting, internal control. Those are concerned that the depth of competencies wasn't there. So I'd like to know, when was the board of directors told, or when did they tell Mr. Siddall that this FTHP incentive was going to be managed by the CMHC?
It's maybe a question for me. Do you want to do this?
You can answer.
The first-time homebuyers incentive was a budget confidential matter that was confidential to our board until the moment of the budget. That's how budget policies derived. We did have conversations with the board about a range of housing affordability policy options, including shared equity mortgages in general, back in October for the first time, I want to say. Yeah. The particulars of the program itself, I briefed our board the night of the budget.
Okay, so you had the information before, then you briefed the board.
We got to leave it there. We'll go to Ms. Mendez and then back to Mr. Kelly and Mr. Kimmich, however they want to work it. Ms. Mendez.
Thank you very much, Mr. Chair. Merci à vous tous d'être ici.
Thank you all for being here this morning and for your comments. I'd like to touch on something, because I'm not sure if my colleagues already did so, but I'm sorry I had to leave the meeting for a bit. But I'd like to talk about the National Housing Strategy, and that it's one of your main objectives is to support these initiatives of a national policy that is part of your very bold aspirations that everyone in Canada by 2030 would be able to have housing within their means. So I'd like to hear what you intend to do to guarantee that this happens by 2030, and also know, and this really is perhaps ignorance on my part, but does this include housing for Indigenous people? Off the reserves, of course. Through you, Mr. Chairman, I will begin the answer, and then I'll give Mr. Siddall the floor. I think that there are two components to the answer on our bold aspirations. First of all, to deliver on the National Housing Strategy, which includes targets and activities that are significant, that will largely help to provide this housing for Canadians. And on top of that, secondly, we are dedicated to finding innovative ways, either in our program delivery models or through our partnerships with the private sector and the nonprofit sectors working in the long term. So on top of existing housing, there are existing efforts being made by those entities, those partners, and how to act as lobbyists for the opportunities that may present themselves to broaden the available housing to meet our aspirations there. So there are two aspects to that, and there are parts of the second component of that we haven't developed yet. We haven't yet identified the actions that we will be taking in the years to come. In terms of housing for Indigenous people, within the National Housing Strategy, there are activities within the CMHC to provide housing for Indigenous communities. But there is a strategy beyond that for First Nations peoples, and that comes under the responsibility of another department, not CMHC. Well, I'm talking about off-reserve here. And yes, well, there is a need that is not being served by the national strategy currently, and I'll ask Mr. Siddall to broaden the comments on that.
That it is possible we will not achieve our ambitious goal. But you won't achieve ambitious things without being ambitious. And just saying we'll deliver the national housing strategy, to us, we're not just a delivery mechanism. We can innovate. We can find new ways to deliver housing and new ways to help Canadians. And the analogy we use is just as John F. Kennedy encouraged Americans to get to the moon within a decade by saying so, if we don't say we're trying to achieve something big, it's our moonshot, then we won't get even partway there.
And I get the point, and I absolutely endorse it. I'm just trying to see how we can look at it in terms of actions that would be more perhaps explainable to Canadians. How are you as an organization going to propose to achieve this objective?
I'll give you one single example. Our corporate plan details this in some, and I won't read to our corporate plan through the chair, but we've reorganized our company to have an innovation function to try to think of new ideas with respect to housing. The budget also includes something called the Housing Supply Challenge, some $300 million, which CMHC will administer, kind of a crowdsourcing platform to think of new ideas. In addition, we've set for ourselves the goal of sourcing $100 million of new money from the private sector this year that we would add to the government's fiscal commitment to the National Housing Strategy in order to make use of the capabilities, the convening powers, and the insights that we have at CMHC to grow beyond the National Housing Strategy and fund more than the government has committed to fund through its own resources.
Do I have a...
No, actually, your time is up. Mr. Kelly, please. Mr. Kimmich.
So just to continue partially on what I was asking about before, will the board going forward be informed of the shared equity mortgages, given an update on the financial status of that program? How every quarter?
Yes.
Will there be a premium surcharge on shared equity mortgages? And if there is a premium surcharge, have you done an analysis on what will you do with that money? Add it to your reserve or feed it back to the general revenue fund?
Well, whether there will be let me answer the hypothetical. If there were a premium surcharge, that money would return to the CRF, to the Consolidated Revenue Fund, because we're just operating it as agent for the Government of Canada. The terms and conditions associated with the first-time homebuyers incentive are within the domain of the Minister of Finance in connection with the budget, and those have not been finalized yet. So whether or not there's a premium and any other terms and conditions have not yet been determined.
Okay. Because shared equity mortgages will have a substantial impact because you'll have mortgages that have a shared equity stake held by the Government of Canada, and then potentially you'll also be providing CMHC insurance on some of those. So you've said that you've done some internal assessment of it. Just as a general policy matter, how do you feel about shared equity mortgages?
I think shared equity mortgages as a policy solution was a surgical response to a particular aggravation on the part of some Canadians, some young Canadian families, as a result of very high house prices and being unable to get into the marketplace. It has some, we've learned from the example of some other jurisdictions, in particular the UK, and improved upon that here.
So British Columbia introduced a similar program called the BC Home Ownership Plan. What are your thoughts on that program? It doesn't exist anymore. It lived for a very short period of time.
The BC Home Ownership Plan, as I recall it, was a down payment assistance plan. Very different in the sense that it supported additional borrowing on the part of homeowners, whereas the shared equity mortgage program does not involve a financial burden. It doesn't involve monthly interest payments or periodic interest payments, nor an uncontrolled, a requirement to repay that's not within the homeowner's control.
Pardon me, Mr. Siddell, but how do you know so many details about this program? They're not in the budget and they're not in the public sphere. It's like, do you have details of how these shared equity mortgages will work?
We've done extensive, sorry, I interrupted you.
No, I just want to know, how we don't know. And I sit on the finance committee regularly. I'm asked to pass the budget, but I don't know any of these details that you know. Would you be able to share these with the Public Accounts Committee?
I am not at liberty to share terms and conditions of the program with the Public Accounts Committee because that's within the purview of the Minister of Finance.
And so, but internally you're using what you do know in order to create models to analyze the risk to the CMHC's bottom line?
That's right.
Okay. And those are based on post-AG report to ensure that you don't overcharge on premiums potentially? And then you do proper
Well, the
management?
AG's report pertained to our mortgage insurance business, sir, not to the shared equity mortgage program. It's a new program.
It's a new program, but it does have an impact on your regular insurance programs that you provide because there's risk involved there.
That's right.
And so then I guess this will be my last question. On the shared equity mortgages, do you know then if the government on the upside will gain? So if it puts 5% down on a used home, will the government gain the upside if the property gains in value? Because that would be a significant impact to the government's bottom line. But also you'll be responsible for managing and knowing which mortgages and which properties the government has a stake in and is going to gain a return on as the agent acting on behalf of the Crown.
The government may suffer a loss on those, and it would be a mistake to assume that house prices always increase. And this is a bias we want to make sure people aren't burdened of. The government of Canada is incurring significant costs, which first would have to be recovered from any possible gains before it was enriched.
So you mean these would be like administrative fees at
Indeed.
the time of
Interest
sale?
costs, our own operation costs. That's right.
That would be deducted at point of sale, at time of sale?
That would be netted from the government's returns. It wouldn't be charged to the homeowner, if that's your question, sir.
That is my question. Okay, thank you for the clarity. So on the downside, potentially, the government also lose on these equity stakes.
Sure.
Okay, thank you.
Thank you, Mr. Kimmich. We'll now move to Mr. Arsenault.
Merci, Monsieur le Président. J'ai combien de temps?
Thank you, Mr. Chairman. How much time do I have? Okay, thank you. Welcome all. Thank you for being here today, and congratulations on your new appointment, Mr. Ballantyne. There have been excellent questions posed by my colleagues, and I might come back to risk management, particularly to paragraphs 36, 37, and 38 of the report. It comforts me in a sense because I have the impression that we've gone through an oil crisis, we've had earthquakes, there are different variables that have been analyzed, and the variables in paragraph 36 are GDP rates increasing, and this test for economic problems talks about a minimum threshold for everything regarding these various tests. And the interpreter doesn't have this report before her, but in paragraph 38, there are other kinds of stress tests that are possible, which might point out latent vulnerabilities. And a latent, I emphasize that word, means something that's unforeseeable and that can just blow up. So I have two questions. Are there any other variables that we should be studying? Other than the four that I've mentioned, are there any other that could have an effect on society? And now I'm speaking to the co-auditors. Thank you for your question. And first of all, I think we wanted to list the most significant variables and not all of the possible ones, because the models are relatively complex. We wanted to list the most significant variables. And when we're doing stress testing, obviously, we're trying to identify those most important variables that have an effect on capital. And if there are any other variables, of course, there are a multitude that can affect the corporation, and they need to just identify rather the most significant ones. Okay, so those four variables are the ones that would have the biggest impact on the role and the service offered by the corporation to Canadians, CMHC. That's right. Now, I'm a lawyer by training, but lawyers, accountants, and auditors always show a great deal of imagination when we're talking about risk. So what catastrophic risk could we have in Canada be worse than the list that you've drawn up here? Because you must have some kind of analysis somewhere that might talk about different risks that you didn't talk about. Well, if I could talk about reverse engineering, we might say, what could be the risks that could mean that the corporation has difficulty with capital? If the recession, as an example, in the United States in 2007 had lasted 5 years rather than 2 years, if the cost of housing in the United States had dropped by 60% instead of 30%. So the whole goal of ad hoc stress testing is to see what situation would put the capital of the corporation at risk. Yes, we could have all kinds of hypothetical questions that will never occur, hopefully, but the corporation would be trying to identify situations that could happen 2, 3, 4 years down the road, and they have to be able to react. They have to have some lead time to react, because identifying long-term impacts of these different situations is what we're talking about. Can we stretch that time out? Can we try and see what the timeline would be if these scenarios were to unfold someday? That's what we're trying to identify, and that's the thinking behind trying to identify these. Well, but we were saying in 2017, you're talking about several years in this report. So what are you talking about exactly? Maybe I could ask the CMHC.
When we look at stress testing, we look at it over a 5-year period.
Okay.
And I can respond more, but okay. And we look at a range of cases. So we look at economic stresses, and in particular, the variable that drives our losses the most is l'itinérance, the unemployment rate. House prices are a little more stable and don't drive it as much. So we look at anything that could affect the unemployment level. We look at the cases we looked at last year, for example. This was published in October, were a low oil price, a global trade war, a cyber attack on the country, an earthquake in Western Canada, and a volcano. I mean, we try and make up crazy things so we can look at things differently. All of which could result in unemployment and an impact on it.
Ça répond à ma question. Merci beaucoup.
Thank you, Mr. Darcy.
That answers my question.
Offerson, the last word today, and you have about probably under 5 minutes, so then we'll go to votes.
Very good. I appreciate that. Thank you, Chair. Man, oh man, once again falls to the NDP to defend poor government entities just trying to do their job, helping out Canadians. Oh, man, it gets tiring. I want to point out, I appreciate the questions my colleagues are answering. They're very, obviously very intelligent, very insightful, but I want to draw back to the conclusion. I mean, I rely, with a grade 9 education, I rely on the auditors. So I look at the conclusion on page 22. If there's anything serious to worry about, serious, I expect it to be here. So what does it say in the conclusion? In our opinion, based on the criteria established, there was a significant deficiency. Now, I point to underscore to colleagues, significant deficiency in the world of auditors. That's swearing. I mean, that's strong language. And there's a big difference between significant deficiency and weakness and improvement needed. So to finish the quote, there was a significant deficiency in the Canada Mortgage and Housing Corporation's corporate governance systems and practices, recognizing they don't do the appointments, the government does. But there was reasonable assurance that there were no significant deficiencies in the other systems and practices that we examined. We concluded that except for this significant deficiency, the corporation maintained its systems and practices during the period covered by the audit in a manner that provided the reasonable assurance required under Section 138 of the Financial Administration Act. Hence my overview that I thought this was a fairly good report. I want to focus, if I can, only got a couple of seconds, on the back to the governance again, because that's the major issue here. I won't find the quote, but you made some reference that there were a couple of things the board could have done to offset that, and I'm curious as to what it is that they should have done, recognizing they had a huge problem. They couldn't fix it directly in terms of appointments, but you suggested there were some things they could have done that they didn't. Would you articulate those for me in the moment or two that we have left? Thanks, Chair.
One of the things that was suggested in the report related to training, often what we see are that boards that identify competencies that aren't being filled by the board members will then seek either external consultants to come assist them in playing their oversight role in specific areas, or they will try to obtain training that will give them a bit more competency in those areas. And I come back to my example earlier of IT technology. So when there are significant IT projects, if that expertise isn't sitting on the board, then perhaps there's an opportunity to seek external advice or training.
Okay, great. Thanks. Thanks, Chair.
Thank you very much to our guests for appearing today. One never knows how some of these committee meetings go, but certainly I think today was a very interesting day. A good report by our Auditor General's office, good questions by committee. Thank you all, and we will now adjourn.